You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
In today's show, you're going to be hearing from professional trader and my friend Nick Santiago of MiningStockEducation.com. We focus on mining stock investing on this channel, and I'm not a trader, so why do we talk to Nick? Well, I think it's good to have a lot of different inputs, both from traders and macroeconomists, to help inform where we put our money, because as a recent guest said, even when you invest in mining stocks, to be ultra successful, you need those macro tailwinds to really push the underlying commodity and therefore the share prices higher in these small mining stocks that we invest in. So I really appreciate talking to Nick once a month, getting his insights as it helps inform my perspective on the markets. Nick, thanks for joining me again. Let's start off with your performance last year before I asked you about 2021. This time last year, what were you saying about 2020 and were you accurate?
Yes. In fact, if anybody was a member out there, you know that I was looking for a very, very big decline in 2021, especially in the first quarter. And as you know, we got that. I had no idea there was going to be a virus involved. The coronavirus was something that I didn't foresee at all. But I was heavily into a lot of put options at that point in time. I started to load up in the month of January for a decline into March. And obviously, the coronavirus epidemic really sped that along and caused us to have a major dip. And then I went long late March. And actually, it was on March 19th, I started to pile in on the long side. And I've been riding the market up ever since. And I'm still in a couple of long positions even at this point. So it was an incredible year, a very successful year. And hopefully I'm going to look to repeat that this year.
As you're looking at 2021, what are the key things that you see?
Well, in 2020, we had that big decline, and it satisfied my downside target in March. And then we've had that really just a rally ever since. We did have some hiccups in between there. But as we get into 2021, I think the last time I met with you, I said volatility is going to be on the rise this year. And I still feel that way. I think that's going to be the trade of the year in volatility. There's going to be some good shorting opportunities. There'll be some good bouncing opportunities. Remember, the markets never go straight down. They rally. And when the rallies, when there's short covering rallies that occur, they really are powerful. So there's going to be opportunities on both the long and short side in 2021. But I think it's going to be a much more wild ride this year. I think traders really got to know what they're doing. They really got to understand chart patterns. They're going to need to really understand where the major support and resistance levels lie. And that's what's going to make you money in this year. This is going to be a challenging year for most.
Do you make more money in a year of volatility than you do in a steady up or steady down year?
Oh, I make much more money in volatile markets than normally I will. I have no idea what I'll do this coming year, but I expect to do much better with the volatility rising because you get a lot more trading opportunities. When the market is going straight up like it has been, there are certain stocks that break out, but it's hard to know those stocks when you're looking at the macro picture. You're trying to always stick with the trend. When you get into a high volatility market, the trend is broken. And there is, for a period of time, no trend at all. Maybe eventually you'll establish a downtrend, and at some point, hopefully you'll get a new uptrend. But when you're trading trendless markets, it's really a trader's market completely because there's no trend there to follow.
Nick, you're a student of W.D. Gann, so you look at cycles from a historical perspective. What more can you share? And I know you give away the in-depth details to your subscribers, but with my audience, what can you share about 2021 in historical perspective?
Yeah, so this is one of the things I learned from William W. Gann many, many years ago, over 20 years ago, and it's held true almost religiously. The 1 year of a decade is always a very volatile year. And just go back and look at 21. Look at 2001. Look at 2011. These were very volatile years. And I just went back, just 10 years and 20 years. And you could just go look at those charts. And we're set up kind of the same way in this 1 year, which is 2021.
Doré Copper Mining is a premier, near-term, high-grade copper and gold redevelopment opportunity with tremendous exploration potential only 14 kilometers from the town of Chibougamau in mine-friendly Quebec. Doré Copper is debt-free and owns a 2,700-ton-per-day mill with an 8 million-ton tailings facility ready to be used. There is already power to site, and it is accessible by paved highway and rail. Doré Copper aims to produce a profitable hub-and-spoke operation of over 100,000 gold equivalent ounces per year, or over 60 million pounds of copper equivalent by 2024. Because of the existing infrastructure and location, a low capex is anticipated to recommence production. Doré Copper trades under DCMC in Toronto and under DRCMF on the OTC. To learn more, go to dorecopper.com. That's dorecopper.com. Could it be a super cycle year of volatility? Because it looks like, quite frankly, we're looking at civil war in America. That's the political tensions are so high. The stock market seems inflated. I mean, could this be a super cycle year for volatility?
Sure it could. I never like to look and say I could predict the news because I can't. But I've been a very, very good predictor of market trends, and cycles have helped me. All of the work that W.D. Gann has done and all the work that he's done that I deciphered, because he really encoded everything. He didn't really come out and tell you, hey, this is going to happen or that is going to happen. But just over the years from doing this for so long, I've now been able to get a pretty good grasp on it. And I've already won, everybody on numerous shows. I wouldn't stake my reputation if I didn't believe it was going to happen. But yeah, we're in for a whirlwind of volatility this year.
When there's societal disruption and there's distrust and there's a breakdown of society, that obviously affects a lot of things, but it really affects the food supply. So in terms of food supply, we've seen soybeans and other commodities going parabolic recently.
Corn is another one.
Exactly.
Yeah.
So what should we expect this year for that?
Well, I haven't done enough work on that to really be confident in saying anything, because they've all had big runs already. So we'll have to watch the chart, and I'll get back to you on that, but I can chart it. I just really haven't done my due diligence on things like wheat. And, I've really only predominantly looked at corn because I have some of my clients, my members that trade that. So I look at that for them. But if you have any kind of civil unrest, I mean, that could disrupt the food supply immediately. If you add some bad weather on top of that, things can get worse even quicker. So I would, just as a safety, I would always have a little bit of storage in my pantry for maybe some of those days that could be a little bit dark this year.
Mm-hmm. Precious metals, and how do precious metals factor into your trading philosophy for this year?
Yeah, precious metals, as I've said, they made that parabolic move in August. They have to make that ABC down leg on a bigger time frame. We've seen some of that already done. In the short term, I think we're going to get gold down to around 1,700. That would be a level that looks attractive for a nice trade. I think gold miners via the GDX, which is the gold miners ETF, I think that's headed down to around 31, and I think that's where you could play that to the upside. How long will the bounces last or the rallies from there? I'd have to look at the chart, but I do think that those vehicles are headed down to those levels.
What are further risks or opportunities that you see for the coming year, Nick?
Well, there's lots of risk, right? So right now, if you just look at the complacency that's out there in this marketplace, it's mind-boggling. We're seeing stocks, alternate energy stocks like Plug Power and fuel cell. Plug Power went from $2 to $62. When you see this kind of action, it's what I call a dash for trash. That means the party is almost over. The music's still playing. The DJ is in the booth. But guess what? The smart people are already leaving the disco. And, they're going to have those people there that are still, buying into that stuff. You got the Robin Hood traders moving markets, but the party's almost over and the lights are about to go on.
Any final thoughts? What have your subscribers been asking you about this upcoming year? Anything you could share?
Just basically, some similar questions to what you've asked today. A lot of them are still very, very bullish. They're still, and I've been a bull. I've been, bullish really since March. I've been saying the market's going higher, going higher. First time I'm, taking off my bull costume, and I got my wife at the dry cleaners getting my bear costume out. So, I'm about to put that on. But I think, we got some volatility ahead of us. And, I get a lot of questions from members saying, hey, the Fed is printing so much money. How can the market go down? The market is bigger than the central banks. So when panic comes in or this fear comes in, markets go down. And just be prepared, because they go down a lot quicker than what they go up. Hence the old saying, markets take the stairs up and the elevator down.
Excellent advice. Nick's website is MiningStockEducation.com if you want his real-time trading alerts and insights. Nick, really appreciate touching base with you every month. We'll be talking to you in about 30 days.
Sounds good, Bill. Thank you for having me.